Good morning. It's the Wall Street Weekly Wrap-Up, May 20th, 2023. I'm John Newquist, and I also have my friend Janice Schulte in here. We're going to talk about stocks this week. It was a week of retail, and that was a hot topic. Some good, some bad. Home Depot, they beat, but they missed on the revenues. They means were a little bit lower. We used to have Home Depot, and you can see the stock was in a kind of a triangular wedge, and then it went down, and then it kind of came up, but not overall a good chart if you're looking at it. I think we sold out when it was like in the 270s or something, way back when. But they're saying that the home improvement binge of the COVID is kind of over, and it's going to be flat now. So, but they guided the revenues below consensus and the outlook. But that's, I always look at it. It's not always what they guide, because sometimes they underestimate on purpose. So versus miss, but they missed on revenues, and that didn't like popular. Target, another one we used to have a long time ago. They beat on revenues, but beat on earnings, but missed on revenues. The comparables were flat, and that means comparing store-to-store sales against the industry. Again, another low guidance and everything else. Revenues, not too much, 0.5% year to year, so they didn't do so much on that side. The shrink is $500 million. That means theft.
That's a lot.
Yeah, I mean, we're watching stores close because they can't control the theft in the community, and that's not good for the community. It's not good for anybody. But they got to, look at it and try to, work with the local, prosecutors to deal with retail theft. Because if you don't prosecute it, it's just like a free steal thing. A lot of these criminals know certain stores will not intervene. You can just walk out with shopping bags full of stuff, and you're not going to get even stopped. When we look at the stats, crude oil is still around $70 a barrel, give or take a couple dollars. Natural gas still under $3. It's creeping up, which is surprising because we're coming into the summer. It should be lower. Gold went down and up. It's still around 2,000, so that's been good. Silver is still around $24. I just put up a chart of rough rice because I keep on hearing there's going to be a big rice shortage. But if you look at the chart, the rice has been pretty flat. It's been between 16 and 18.50. So, here I am buying rice because I think it's going to be a shortage just in case. And the markets are telling you really not there. And then we look at the index, the NASDAQ. It broke to a new high. If you think about it in the last 52 weeks, it's higher than it was. And that defied all odds because everybody said it was going to come down to the lows. I mean, if we, a lot of the stuff we bought, I think we bought around November, January.
Yeah, end of last year, I think.
And, of course, look at it. It just jumped. I mean, that's a big, 20-some+% increase. When you look at the top gainers, they're almost all NASDAQ stocks for the S&P 500. NVIDIA, number one, Meta, number two, and then you got other ones that we own like Microsoft and Snap and other ones. So, I mean, it's, it's all tech. But if you didn't have an overweight position in it, you're probably sitting there at flat zero. Dow's, Apple's been flat, Amazon's been flat, and it's down, or it's up 0.8. But our goal is always to beat the S&P 500. So we were 3% at the quarter. We're probably, if we look at the numbers, probably 12% up year to date, which is good. Walmart is one of our portfolio stocks, beat by earnings. And comps were 7.4, so that means they did 7.4% better than everybody else in retail. The revenues were good. The guidance always again below estimates, so I don't really worry about guidance. Revenues were in line, but they're going to raise the guidance. People are coming there. People are downsizing the shopping to buy Walmart cheaper groceries, cheaper products. So that's taken away from a high-end retailers, but pretty solid. And you can see it's got a multiple top. If it breaks that top, then it's going to be a new record. So that's what everybody's watching, and it's kind of bounced up to that top and not gone through it, but solid company, a solid company. John Deere, the agriculture and the GPS tracking and the, going out and putting the tractor out there. Eventually, it's going to just farm itself, and you just program your lot in there, and you don't even need a farmer to drive it. It'll go out there, spray it, and it'll be perfect every time. And again, earnings, $10 a share, that's huge. I mean, that's a lot of money. And revenues rose 33%. This is like a tech company, 33%. And of course, when it goes up and does this well, the market takes it down, which is always amazing. But they looked at it as like, well, we're going to drop some in revenue. So that's why everybody's looking at we're going to see a drop in it. Well, maybe, but I mean, they're the leader in technology farming, and it's doing well. So, I don't know where you would buy it. It broke through the trend, so that's never a good sign. Um, Maybe down to, will it get down to the low as 300? Maybe, we'll see. I would look at the July low of last year. If that's a number it gets to, you might want to nibble at it because it's not going away. I mean, you're talking billions of dollars spent on precision farming, which is more nice. When they get autonomous farming, that's going to change the whole world because you won't need people to, drive the tractors. And then Foot Locker. Janet, you ever been to Foot Locker in the last 3 years?
No, I have not.
Well, apparently everybody else is in the same boat. Disappointing earnings, a lot of inventory. You can see it just gapped down. I mean, look at this drop, 25% drop. And that's if you're the stockholder in this in retail, that's a tough one in there. Nike is having problems, and so I think people go in there. People can buy shoes a lot cheaper than they can buy it at Foot Locker. I don't want to say that. The only way you're going to get people into Foot Locker is you have stuff that they can't get anywhere else, like exclusives from Nike and things like that. But I just talk about stocks. It made the news because it dropped 25%. Expedia, another stock we used to have, they're losing money now, which I find incredulous. In the high gut of travel, you are making money on every transaction, but they lost 20 cents a share. And so the market's been beating them up on it. You can see it got up to 120 and now it's down to 90. If you bought it in the beginning of the year, you're still up a little bit, but it's not good. I mean, there's a lot of people, we don't want a stock that doesn't make money. And, if you don't have money coming in, the market's pretty brutal on them. It can run up fast, but it could also drop. We want to be in there for the long run. So you got to make money. I mean, and I look at a company like this, it could be $50. I mean, there's nothing says it can't get worse with a company that loses money. And then we're still changed. We didn't change anything the last few weeks. Overweight in communication service and information technology, underweight real estate, energy, and financial. I just show Snapchat because we own that, and you can see, it's got a tough climb. If you look at this 200-day moving average, you can see it was at 17. It's now in the reasonable range. So if you're going to buy Snapchat, which is profitable, I would consider it. The AI from Snapchat, which is actually just says Snapchat AI, it answers a lot of the simple questions. You can't get complex answers like ChatGPT, but it's not bad. So overall, good week. Again, we're setting some new high records for the indexes, and that's what we want to see. Hopefully, and a lot of people, hoping this debt ceiling goes away and everything else. Any thoughts, Janet?
No. It's like a crystal ball. You just look in and hope for the best.
Okay, we'll see you next week. Thank you very much.